Hello, folks. I am David Russell, VP of Market Intelligence at TradeStation. Let me just get the disclosure slides up. Here are the disclosures for you. All right. So, as usual, we will be using a rundown that is on the Market Insights blog. If you go to tradestation.com and then you go to Research Insights, the research menu on the top right of the TradeStation navigation bar, and then you go to Insights, it will take you to the Market Insights blog. On that blog, you will see an article with a Wall Street sign on it. And that has the information that we're going to be working off. In this case, it's interesting though, because a lot of this stuff this is a fascinating situation that we have right now with the market. And so let me just show you very quickly. If you're on TradeStation, go to Research Insights, and then this right here. So this is the rundown we're working with, and basically it's interesting. Well, you know what? It actually turned out not being a bearish outside day yesterday. A lot of these things are just interesting because, you know, in a different market, we'd be down today. But when we take a look here and we really kind of go back, and for me, it all comes down to this, which we've talked about a lot, the breadth indicator. And this crossover remains just an incredibly powerful indicator that has remained very effective. Now, what's interesting is once we break out over that August high, you know, pullbacks here are just very, when you break out like this, the thing is there's not a proclivity to pull back quickly. And it has a more likelihood to extend. And what's interesting is, I mean, the Fed was about as hawkish as they could be, in my opinion. Pricing in another 50 basis points was kind of, I thought, kind of nuts. You know, they've seen a lot of what they essentially are on the course for. A lot of people, I don't think anyone expected them to put out that kind of number, especially when you look at some of the data we've had recently. CPI and PPI both below forecast. When you look at the last jobs report, what's really interesting when you dig into the dot plot from the last Fed, and I'll actually show that to you. Let's just go to it's on what's the Fed. All right. And if you go to monetary policy, and then you go to meetings, calendars, and information, we go to last meeting, we go to the projection materials here. And what's really interesting to me is this thing here with unemployment. So basically, this is where this is GDP, unemployment. Here we go. All right. So before they were basically projecting this, and now they're projecting, you know, unemployment's going to stay here around 4%. So as unemployment in their mind remains lower, the dot plot moves higher. So now we're up at 50 basis points above our current level is where they want to go now. So before they were down here, and now they're up here. So to me, that's just kind of the key thing. The real thing here is that for them, as long as unemployment, you know, remains, you know, kind of under 4%, they feel comfortable just hiking, remaining very hawkish. It's kind of giving them a license to go. But I think at the same time, we had talked about various things here, which, you know, in my mind was really this AAI survey, which we flagged last time. See, it's inching higher. This increase was a sentimental change. This was a change of an entire sort of epoch, in my opinion. And once you have a big growth, 15 percentage point of going from not bullish to bullish on this, that was the biggest increase since November 2020, when the market started rallying after the election, the COVID vaccine news. This is a change of tone of overall sentiment. And it says at this point that people are going to just be more aggressively buying. Also, if you look at the National Association of Active Investment Managers exposure index, it had a really big spike. This was the biggest spike also in a healthy amount of time. I don't have the exact number. We actually, I have it here in my rundown. We actually look here. This was the rundown here. Let me see if I can get these. So this was the biggest gain since April of 2021. So anyway, it just kind of shows as well that, you know, the sentiment has changed. The overall sense of where we stand has gotten more bullish. And this is, I mean, I just have to say exactly what I've kind of been saying now for some time. And I think the thing is that there is this, you know, religious belief that there has to be a recession because the yield curve's inverted. And there's just these people they're so sure of things despite the data just going in a completely different direction. And we've been talking about this for a long time. The thing is now that false religion or that false belief, I'm using a term like religion because this thing where people believe something in spite of evidence. They believe there's going to be recession because the yield curve's inverted. They believe because the Fed is hiked, the economy has to slow. And it's a nice thing to believe, but the thing is, it's not always going to be the same cause and effect. And the thing is now the people who assumed a certain outcome are now abandoning that belief. And now they're going to a different camp. And as that shift happens, that is more lasting. And now we're at the spot where there's simply money coming off the sidelines and people who are realizing, you know what, we're going to be higher. I believe the belief is we're going to be higher in 6 to 12 months. So for long-term money going in, now is the time to do it. And that is, I think, what we've been starting to see here. There's just this thing of people willing to kind of chase to a certain extent. So can you guys hear me okay? Also, I want to make sure, are you seeing my screen correctly? I just did another Zoom call. I want to make sure I'm not messing anything up. Are you guys seeing my screen? Let me make sure this is out correctly. Yes, all good. Thank you. So I do look at this now. And so what I did was I've given you guys this thing called RSI pullback, which I find to be, it's in one of the ELDs. So in the actual rundown here, if you guys don't know, there is basically a zip file. And that zip file has a series of indicators in it. And basically, when you open it up, you're going to see, here we go. This is what you'll see. You'll see this folder, and you open it up, and we then have a series of ELDs and then a series of workspaces. And I'm working off those workspaces. And this is going here, Keltner pullback is one that I've given you guys before. And each month I kind of update this thing. I also have something here called the MA Cross Days, which is an indicator I created recently. And I'm now at the point where a lot of things I've come up with have worked. And now I'm trying to kind of figure out the next interesting thing I want to show you is. So I'm kind of, this was, when we discovered this last year, and we were talking about it on the webinar, this crossover, when the number of companies above the 20-day exceed the number of companies above the 50-day. These are custom indicators built in the TradeStation that you can then use. And this chart makes it easy to see them. This has worked very well. It's a kind of an enhanced version of breadth because it doesn't just look at like who's up or down, but it looks at, the comparison of companies above the 20-day versus above the 50-day, because you have to go above your 20-day before you go above your 50-day. So when you see them crossing the 20-day first, that kind of tells you beforehand that they will then be moving that way. And that's exactly what we saw. So we had the most new highs, here yesterday, 2 days ago that we've had in over a year. So a lot of these things now are all signaling like this is now an environment that is going to be, more likely to move higher. However, well, with more of the sort of, technical backdrop of a positive sentiment. However, we're up for 6 straight days. That is the longest winning streak since November of 2021. So there's certain things here that are, from my perspective, just a little bit, are signaling things a little bit more to be not bearish, but maybe to be people thinking about taking some profits here. So let's just take a look at a chart. I'm going to do something here. So, wow, look at the airlines. Look at Delta. And we've been talking about this. We talked about the airlines, the cruise ships, because they have basically these are leveraged cyclicals that have been dead for years, and there's not a lot of entrenched longs in them. And this is exactly the sort of price action that you get when you're in that sort of melt up, when we realize, wait a second, there's not going to be a recession, and then your leveraged cyclicals like airlines and cruise ships suddenly they make a lot of sense when you have a risk model, when you have a model that's going to be based on GDP growth or something like that, when it's going to be modeled based on things like defaults and credit risk. When you remove the recession risk, things like airlines and cruise ships, from a valuation model actually look potentially attractive if you look at them from that view. The great thing about these companies, what's interesting about them is they trade a lot of options, and you can do a lot of interesting things with options. And we talked about some of those strategies before. I don't necessarily have any clear ideas right now for some option trades. I had, we had talked about some of the airlines, things like Carnival extending to the upside, which it did. It's kind of interesting. So let's take a look though at S&P. I added here very simple. I went to studies. I added RSI, which you can see here, RSI. And then we're going to also do Keltner pullback, which is the custom one I gave you in that zip. Add these. Yes. There's a few things here. First of all, RSI. Oops. First of all, RSI is overbought. You can see that here for the first time since last summer. This came up in the wrong window, but no fear. I can click on it, edit Keltner pullback. You'll notice here the scaling came up. I need to actually fix this. I'll show you right now how I'm going to fix it. Let's actually just kill it. Let me just show you a little trick. First, let's go to edit easy language for Keltner pullback. So you guys can do this yourself because the version that I gave you probably had this mistake in it as well. It's not a real mistake. I'm going to go down here now and I'm going to remove this and hit delete. Go back to my easy language. Now I'm going to go here and I'm going to actually go to properties. I'm going to go to scaling, and then I'm going to set this to right axis. Okay, now I'll do the subgraph too. Then at least it kind of, Now I'm going to hit F3. So let's now go back to studies, add studies, and then go to Keltner pullback. Add this. It might overwrite RSI. Yeah, it came up. I'm going to just now go to this and I'm going to just go to edit, and I'm going to move it to subgraph 3. But I did that before because before, for some reason, I had it set up so it popped up in the same as the price, the actual price chart up there. And that's not what we want. So we go to scaling, and then let's set it to subgraph 3. That's going to put it down one lower. Okay. So this also is an overbought kind of reading. So both of these now are like overbought. Now, as John Maynard Keynes, who was probably a better trader than he was an economist, said, the market can remain irrational longer than you can remain solvent. So the thing is things like this can go to an overbought condition and remain that way. And in many ways, from my perspective, when you see these overbought signals getting, happening, you actually are going to find that, in my opinion, this is actually something where you could very well see that this is a sign of a lasting strength in the market. When you start to hit overbought and oversold, very often it's it might mean a near-term top, but it can actually be a sign of the market going into a more permanent sort of time of strength. When you start to see like consistently overbought, when stocks are trending higher, they tend to go overbought, pull back a little, overbought. They don't just go overbought to oversold. And when you're in a trend, that's often what we see. So this is what I love about TradeStation. We can just go to data. Let's actually go to edit symbol. Let's look at, 30 years of data. If it'll give it to us, let's let it load. And I want to just show you something about this that we can use to look back. Let's look back to 1994 and 95. I keep saying that this moment has a similarity to back then. And let's look back to that moment in time when the market did break out. And this was, here we are in 1997. Let's go back to, I'm sorry, I'm just going to use my keyboard. All right, here we go. This is the big breakout. And this here is the breakout of 95. All right, that's the beginning of 95. And this is when the bull market of the late 90s began. You'll notice that once it starts going overbought, doesn't stop. I mean, it remained, it did not have RSI go to oversold for a long time. Look at this. All right, so not until July of 96, so 18 months without an oversold condition on the S&P. I think you just got to realize that this is what, I mean, based on the analytics, the kind of analysis that I've been doing, and it has been working. I mean, there's times I'm wrong, but in this, I have been accurate. The analysis I've done has worked. And I think that when you look at this sort of thing, this is the sort of, this is my template. So seeing some overbought along the way, it's not necessarily a huge problem. But it does also mean that, for people looking to take profits or anything like that, when you're up so many consecutive days, it's just something to kind of think about here. But I'll tell you, this is pretty remarkable. We had this IPO of this company today that is this Kava, which I don't know very much about, but it's, just kind of showing that people just are not fazed by the Fed. And it's pretty stunning when you really look at it, because the Fed, is putting us in a position where they're going to be like 100 basis points over CPI, which is remarkable. And I just think people right now are looking out and they're realizing that the situation is getting better. They don't really believe the Fed. And the question is just, will the Fed, actually come through more on the hawkish side? And that's something right now I don't think we can really discuss, but I do think we can look into the internals of the market, and that's what we've seen to see that these things are working out. So let me just see what other things are really of interest to me here, because if I looked at this, I thought it was interesting when you look at let me just run through the points I wanted to make. What is interesting is Powell said the conditions that we need to see in place to bring inflation down are coming into place, but the process is going to take some time. So if you look at the recent data, all these things, all of my operational assumptions that we were going to see a big drop in inflation starting in May, June, when the base effect kicked in following the spike in early 2022, it's all happening. CPI, PPI dropping. And then we also see China data imploding exactly as we anticipated. And that is a kind of tailwind or a headwind for inflation or prices. That is a positive in what it's going to do, for prices. And I think that, all these things right now, it's when you still look out to the future, things still look like they are, getting better, and things are, more in a positive direction here. A lot of these companies were interesting. We look at things like, there was this news on the cruise lines. There was this thing happening with let's go in order. Advanced Micro Devices had this new AI focused chip. I've been kind of watching AMD here and actually trying to see, because today it's actually kind of weak. And it's interesting to see this kind of pullback here. And these kind of candles are not massively bullish. These kind of false breakouts and stuff like that. So, we are seeing some things like this overall. And, one of the things now that in my mind people might be looking for is a rotation, toward, away from some of the tech names. And, that is something that is, an elusive thing to look for. And I'm not even predicting it's going to happen. But to me, what really stands out are the industrial stocks. I've been talking about this. And I think that this is really the area right now that is, I think, some people are going to be focusing on. With the Chinese data being weak and China now re-stimulating their economy, some of the names like Caterpillar and stuff have been coming back to life, but also what we've seen in the airlines. And I still believe that a lot of these American focused companies like, Ingersoll Rand and Eaton, the ones that kind of stand out. This is a big trend that we've been talking about. And I just want to say that I think that we're going to see now people suddenly talk about, like, if you look at we mentioned this last week, I'm just saying that this is going to pop up as a story. We anticipated what was happening with China. We anticipated what was happening with inflation and the market having too much cash in the sideline. And if you look back here to, I think it was this post we did 2 weeks ago, basically this one, the banks had a little bit of a surge and they kind of petered out. But this thing, I still believe, is going to remain a major story. This is the construction of American factories. This is going to become something that people start to actually talk about in coming months. And we're going to see this focus on the American industrial sort of names. All right, let me see. It's also interesting to see, Lennar, strong earnings report. I think like last week we highlighted, and I think we very quickly returned to that. We basically highlighted in this, in our market trends category, if you just look at the overall category, it shows a rundown for each week. We basically showed that this market has, multiple pillars that this bull is standing on. Market trends to watch: interest rates potentially coming down, value, banks, cruise ships, airlines. Well, we said that, and JP Morgan came out. Now this is reindustrialization of America. There we go. Housing, potential European opportunities. Now let's look today at the European ETF, VGK. Look at the global market. And so this is something that I think overall remains one of the backdrop, the EFA. It's interesting. Japan is just now starting to get attention that they are re-entered a bull market after basically 30 years of a bear market. The Japanese market is like Honda Motor. I mean, some of these companies, they're not actively traded, but they've just been going absolutely crazy to the upside. So if we look here at MT sectors and we look at, the EFA, which is the biggest global ETF overall, what's interesting is you can see it, this thing has just lagged really for the last 12 to 15 years. And so at this point, this is a question of, as the Fed nears the, at the end, and as the market kind of looks for that, there are these global stories like Japan, Europe. I mean, these are areas that have been neglected for so long. And I think there's so many areas here where people looking for opportunities in stocks are going to be finding them. And I think that we just have to realize that this is a structurally positive environment. And I think we just have to always keep that in mind right here. All right, so the mover of the week that I wanted to mention is a company called Yext. This is another emergent AI name. They do some kind of software that builds websites for you, and it uses AI and stuff to interact. I'm not sure if it uses AI to build the website or if it uses AI to interact with different users, so your website can be more interactive and know what interests or whatever. But it's a new software company, and we look at the numbers on it. It's not. If we actually go down here to fundamentals, one of the things we've created for you, these this has a whole series of data. If you want to do fundamental data, let's put in Yext. Let's learn a few things about it. All right, we can go down here to our indicators. You can see the revenue growth, trailing 12-month revenue, $400 million. Well, that's not very much. And then if you look, it's basically, its trailing growth is only 1%. But if you look at this thing over time, be interesting to kind of see where it might be. The key thing though is names like this that are kind of small, market cap of 1 billion. And in my view, many cases now you have these stocks that are kind of under 10 billion, under 20 billion for, some of these software companies. People are going to be looking for these growth stories as the overall sentiment remains bullish. I think that's where we are right now, is that basically these sort of companies are people saying, all right, I'm thinking for the next 3 to 4 years, I'm thinking of the Fed hike stopping at some point. I am like, let's imagine that we are in a new bull market that's going to extend for the next 12 to 18 months. What's a stock that is going to be higher? And the question is, a company like this, is it only $1 billion? Is it only going to be, $1.6 billion? Or is it going to be $5 billion company? And I think that's the sort of long-term thinking that people are now going to be putting to work. And so a name like Yext, we had talked last week about Mongo Database, another one of these kind of mid, this is a bigger company. I think it's around 20 or $30 billion company, but let's actually see, we can just compare them. Say 26 billion, but these are some of the areas now where, people, going to be starting to look for those opportunities. And as volatility comes down, there a lot of new names are going to come into play. And I think it's important to realize that a lot of companies went public in the last 3, 4, 5 years, and a company like Yext that went public, I think in 2017, and it's basically done nothing the whole time. So the thing is, if you look, actually, it went public somewhere higher back here in 17, and then it dipped, and then so when you really look at it, so anyway, that's Mongo Database. Yext, it's really just gone nowhere. So a lot of these are areas now where people had neglected them, and now you could start to see them actually be embraced as real companies that actually are going to get broader appeal. So now's the time for people to be starting to look for some of these newer narratives that are going to emerge. And that's why I like to kind of highlight these companies. They're not recommendations. A lot of them are overbought, but very often these are the times when you start looking for those sort of names where you have the price to confirm it. So what I did for this was I basically did a scan for stocks that were moving a lot, that were not necessarily in an index. I basically excluded members of the S&P 500. I looked for stocks that were big, they were up a lot in the last like 4 weeks or something like that. And that's usually how I come up with these scans. All right, upcoming events. That was last week. Yeah, this was last week. But it's interesting to actually look at something very quickly like Mongo Database, because here's something where you look at this kind of price action. Look at the S&P. Rallies, and look at the sideways movement continues. So I think when you look at something like this, these things are similar. Look at this, it's holding at that level. I mean, to me, this is kind of interesting that it hasn't pulled back more. It's just now the 8-day exponential moving average is catching up to it. So like, this is the sort of thing where, names like this is actually kind of interesting. Look at how NVIDIA performed like this. 8-day comes up and you get the extension. So these are some of the patterns I think are kind of interesting. And you're just seeing that the pullbacks are just very tight, and there's not a lot of, selling. And I think that's really the thing we're seeing here. And some of these, anyway, I think I've said it, these are the sort of things where people are going to be kind of looking. All right, so we basically have Adobe this afternoon, and then we're going to have quad witching on Friday. Next week, don't forget, Monday, the market is closed. And then next week is housing week. So we get things like jobless claims on Thursday and existing home sale. We get housing starts and building permits on the 20th, on Tuesday, the 20th, when we come back. Remember, housing stocks have often been active around these big events. And I think that's something here that we need to remember, because the home builders have been, outside of technology, home builders have been just a dominant part of the market this year. The ITV, things like Lennar, the builders. Let's take a look at Home Depot. I haven't actually looked at them for a while. Really no kind of clear signals here. You can see a potential here for trying to break this range around 300. But with the 50-day moving average below the 200-day, something like this could actually sit here for a while longer before it does very much. All right. So someone asking, I joined late, where are the files located? If you go to tradestation.com and then you go to research insights, it'll take you to my market insights blog. And then from there, you can basically go and at the top, there's a series of downloads that you can then access from there. All right. Good to be with everyone here. We've got about 50 people watching. All right. So now what I want to do is I want to see if we can kind of I want to see if we can, I'm trying to think of some of the different scans we can do in this environment because things just keep kind of, evolving. And, one of the things that's always useful is to look for things that, for example, I have a scanner. Let me actually bring up my scanner. We can start looking at some of the scans that I have recently done. So one of the things you can always do is scanner. And I would suggest this is to add the column last run, or, last run date, because sometimes you have a lot of scans and you might not always see when they were run. Can make the font bigger as well. So, and now basically, one of the things I've created is just a scan that can look for recent 52-week highs. So one of the indicators I've given you guys is days since 52-week high. So if we want to create this, what this scan includes is basically the days since 52-week high. You set it to the value less than 21, and that will find stocks that have hit a new 52-week high in the last 21 sessions. And then what you can do is you can add 5-day change. So let me just build something like this from the beginning. Let's create some scans. Let's just say, I'm going to give it today's date as the name. I'm going to change it a few times, and I can always find it. All right, I have mine set up as default to always show. I'm going to go to all stocks, and then I'm going to go to, it's always going to default by clicking here. I saved this already. It's going to have market capitalization of a billion, which is 1,000 million. And then it's going to always look for things that trade at least 500,000 shares a day. So I'm going to now add my indicator called days since 52-week high, which you have in the workspace I've given you. Days since 52-week high low. And we're going to say less than 21. And that basically will find stocks that have made a 52-week high in the last 21 days. Then we can go right here now to this next one called price. This category called price, and we can go to percent change, like 10-day, and let's say it's less than, say, 1. That means that it made a new 52-week high recently, but it hasn't run a lot in the last week. You don't want something that's up like 30% in the last 3 days. You want something that hit a new high and now it's kind of flattened out. So we're going to run this. And then this is just a really simple way to kind of, start finding potential opportunities. And now I'm going to do a really quick. Wait a second. Here we go. Let's see what it gave us. So now by clicking on this, it will show me I can sort by who's up and down the most in the last 10 days. So I'm going to just quickly bring up a little chart here. I'm going to link them with symbol linking. And now I can start to see that some of these stocks, see this one crash, it hit a new 50-week high and now it's down. So we don't necessarily want that, but we can find other things. You can add other criteria. You can say, I want to find stuff that, is only above the 10-day moving average or the 50-day. You can add that if you want. It slows the scan down. The way I like to do it, I like to just add a bunch of stuff and then just look quickly, going through my list and kind of saying, this is interesting. This is going to be called Smartsheet. This is a software company that was it did very well for a while when we had all the growth stocks, even before COVID, when there was a kind of a boom of IPOs, and it probably had a bad earnings report there. But now this is sort of thing where, this is something that probably would have provided interesting opportunity, because you can see there's an interesting support level here. This is one you could have just pulled up. If you'd been running the scan a day or two ago, it would have identified this as being an opportunity. Another one is Rambus. I mean, that's showing some, honestly, I'm not saying any of these are necessarily opportunities, and I haven't seen these, myself. I just created this scan now, but there's a very quick way that you can start looking for things that are starting to kind of, outperform. Another indicator I've given you is, all right, it's called MA distance from, all right, MA distance from 52-week high. So I'm going to now remove, let's just turn this off. First, this is going to find stocks that have how far it is from the 52-week. All right, so it's going to find how far the 50-day moving average is from the 52-week high. So what we can do with this is we can find stocks that are pushing up against their 52-week highs that are near the 52-week high. So, like, for example, if your 50-day moving average is, say, 10% below the 52-week high, it's going to output a -10. So we want to find stocks that are going to be greater than -0.1. Okay. And what this is going to do is, this is going to find now, and I'm going to now remove this and remove this. And let's just see what happens. This one is going to be slower, but I've done this scan before. And what's interesting is this can find those companies that are grinding toward kind of potential breakouts or starting to accelerate higher. For example, one that recently came up on my list was DXCM. And this is one that has been grinding near its 52-week highs. This is a 52-week high from this is over a year ago. So here it's just now near the 52-week high. What I did with this scan was, and if we actually go here, I can show you in radar screen. I can just quickly do a radar screen here. I'm going to add a few different stocks. Like Apple, DXCM. And then I go to studies. I'm going to go to add study. And then it's called MA distance from 52-week high. We add that. Now we want to make sure we set this to daily. So this shows for, that's strange. They both show the same number. It shouldn't do that. There we go. So now, for example, if I add moving average one line, I'm going to just add the 50-day moving average here. So for a stock like this, you can see that its 50-day moving average, its 52-week high is now all the way up here. But, it's basically, though, it's relatively close. Now, if you look at a stock like Microsoft or a stock like, I'm trying to think of one that's really run a lot. Something like Palantir, right? It's really shot up a lot. So we look at a name like Palantir. Let's see what value that gives us over here in the study. It gives us a -37. That means that this 50-day moving average is 37% below the 52-week high. But the thing is the closer it is, what it actually means is you're going to find stocks that are grinding up against their highs, that are potentially kind of starting the breakout and starting to move higher. And that's kind of what I'm looking for with this. So let's see what this has returned for us here. Why is it doing this? Sorry. All right. So if we look at the ones, the closer it is. So let's look at here like Visa. Look at that near its 52-week high. And this one is one that hasn't broken out, but it's interesting to kind of see as you go through the list, you're going to start to find companies that are near highs, but they haven't been running. And these are some of the things that, from my perspective, for people who are looking to kind of have, play things that will catch up, and things that have relatively high probability is an example of this. Now, last week we talked about Walmart, and we had talked about the 155 calls of Walmart. And we said Walmart was likely, look how similar Walmart I discovered using a similar approach last week, because basically Walmart was near that 52-week high. It was just kind of lurking there, but it wasn't, hadn't reached it. And what I essentially said was that a company like Walmart, after a good earnings report, it was going to have just a graviton effect to the upside, just this sucking movement toward that high, because in many ways it didn't have a reason to be down in a bull market. And you actually can see things like this so this will start to find stocks that are relatively near their 52-week highs. It's a different approach and something I created using TradeStation, but it's just one of these things when you notice certain patterns, kind of just keep happening, you can then go and code them with different tools. And this is one that I wanted to give you guys. I'm just looking at some of the other scans that I've created over time, because at this point, we're really in a whole new kind of market. The other one I've given you is something like, I have 52-week highs, recent 52-week highs, Keltner pullback. So the Keltner pullback remains one that I find very interesting. I'm trying to see if this gives us anything good right now. I don't know if that's gonna. I'm just saying the market has just literally changed in terms of things that were interesting a day or two ago. A lot of them have just completely extended now. So the Keltner pullback, what it does is it basically puts Keltner channels into a single indicator, and I've given it to you. I showed it to you on this chart of the S&P, right? This is what it looks like on a chart. So when it's a high reading, it means that the thing is pushing the top. If we go ahead and add, for example, Keltner channels, you can see that we're way above the Keltner channel. So what it does is it basically says, how high are you above the top or below the low? So you don't want something necessarily that's like something that's getting completely hammered, to the downside will have a really negative reading. And that's not necessarily what we are looking for. We're looking for things that are really kissing the bottom of the Keltner channel. So we look here, for example, at, this VKTX. It is pretty close to the bottom of its Keltner channel. It's interesting here. You know what? This scan ran last night. So when did this scan last run? This one ran this morning. So when it ran this morning, the stock was probably near its low. That's why it was showing slightly below the Keltner channel. But you can kind of go through and look at, some opportunities using the Keltner pullback. And no, I'll tell you, man, this is at this point, I'm trying to really kind of find the key things that are going to give opportunities pointing forward. At this point, I honestly think that this market is entering a period of a frenzy, and it's going to be. We're going to be looking for things that are getting chased, and so then what we can do is maybe then the thing to do is to start looking for simply new stocks making new highs, things that are, for example, making big gains. So how do we find new highs today? Let's go back over to the MT main, and then let's go to our price grid. See, this is why I have all these things set up, because the market is always kind of changing, and you might find something a day or two ago that makes sense and it looks good, and then 2 days later it has played out. And now we need to look for the next things here. So this indicator I've given you, this distance from 52-week high, will tell you today's high versus yesterday versus the 52-week high, which was assigned last night, which was based on the 52-week range as of yesterday's close. So these are going to be stocks that are making new 52-week highs today. Look at Microsoft, very interesting. Meta, Lennar. So as we kind of look down this list, names that are near the 52-week high could provide some sort of opportunities as some of the things to look for. And I'm just kind of watching these. But for people looking for just kind of continuation, things that are going higher and continuing, this approach of simply looking for things near the 52-week high could work. All right, let me look now for our MA tools and see if anything comes up on there. EMA test will tell you when stocks are basically holding the exponential moving average. So let's look for some, if anyone's looking for long opportunities using EMA test, we can actually start to see, for example, these are some semiconductor, like Applied Materials, and there's AMAT. Both of AMAT and AMD, both of these are kind of right at that 8-day exponential moving average. The 21-day EMA test will do the same sort of thing. It will tell you stocks that are at the 21-day. So looking down the list for names like this is another potential thing to be thinking about. It's interesting, actually. Look at Las Vegas Sands here. There's a name that had a good earnings report, basically tried to break out, pulled back, and now it's kind of, right there at the 50-day moving average and all these places coming together. This is one actually that to me could be kind of interesting because I want to show you something else. The 8-day exponential just rose above here, the 21-day exponential, and that is some people would consider a buy signal. It's just a signal that I have seen people use. Another thing we can do at the fundamentals tab, and we've talked about this, is when we are looking, if you're looking for stocks that basically have, you can look by things by industry or by enterprise value to market cap. So for example, when companies have a big enterprise value to market cap, you're basically going to be finding stuff that's leveraged. So a lot of these are going to be banks for various reasons, but you can also see it starting to pop up here with some of these sort of travel related stocks, the airlines, things like Caesars. The casinos had some interesting moves not that long ago. And I think these are some areas now that might be starting to pop back up for people. I'll tell you, this is just like such an interesting market of money coming off the sidelines and the VIX collapsing. There are people looking for new opportunities all over the place. And there's all sorts of new stuff that's starting to come to life. All right, let's just look through some of the other workspaces we have set up. I'll tell you at this point, I'm trying to really find what the next signal for me is going to be in terms of anything that we can look with, with a degree of opportunity. What I would say right now is that we're entering a period of time. We have to remember it's on the calendar. It's going to be relatively quiet for the rest of the month. There's no earnings. I'm not sure if we'll get some Fed speakers popping up. I don't see any on my calendar, but they might start popping up soon. There's not a lot of news or anything. We have a holiday with Juneteenth, and then we have a holiday with the 4th of July. So it's interesting now, Juneteenth kind of creates this new thing where we end up with like these two holidays close together. And, it's not going to be exactly like Christmas and New Year's, but you're in a period here where, the market can kind of drift. And when you have this sort of bullish situation we're in right now, it could be a complacent drift to the upside. And it could go into more of a FOMO environment. And I think that's something that we have to bear in mind here. And so I'm trying to really find something that will be the next sort of, clear signals. And I think a lot of these things are going to be simply things that, from my perspective, looking for things. And all right, so here's another way that something, say it's a day or two from now, and all these stocks right now, this indicator called in range multiple days, this tells you right now that a stock like Microsoft is of its 10-day range, it's at the very top. that 99%. So if you potential opportunities would be looking for stocks that have lower readings. Like, look, I'm not saying this is a buy or anything. I'm just saying a name like Allstate is it near the lower end of its range. So a way to view something like this would be to, and we go to over here, we go to MA tools, and we can actually add now, can add in range of multiple days to MA tools. Okay, now we can say I only want to see stocks that say, let's do something a little bit quicker. Let's say we want to do the 5-day and the 20-day moving average. So this is going to basically, this tells us stocks where the 5-day is in relation to the 20-day. So we can sort now and get only the ones that have a bullish configuration. Go down here and go to data, add label row, and then we can sort for things that are near the bottom of that range. So now we're going to find stocks that might have what would look like a potentially bullish, shorter term moving average setup, but these are near the bottom of their kind of ranges. It's kind of interesting to look at something like this one. Look at this support area that's kicking in along the bottom there of this. The travel related names. I'm just kind of looking down this list to see some of these sort of opportunities and see what's popping up. But these are some of the sort of approaches, that from my view would have. Another way to do is a look for days since they made a 52-week high. So let's look for stocks that have made a 52-week high in the last, month, right? And then you go to add label row. And then the same thing. Look in the range, and you're actually going to find, again, there we have another one, Biogen pops up. Interesting, Google. Actually, I should mention, Alphabet, if you go to what we do here, and I'm going to share this in the chat on. So we publish these ideas here in TradingView, and some of these different names, we had done an actual study here of Alphabet. So it's interesting. Alphabet came up to me because it was the same sort of thing. I basically was looking at in range multiple days. It was at the bottom of its multi-day range. And it's interesting here to see that now we're getting some follow through in it. So this one would have popped up as being a signal here because it had, you could see how, depending on how you would have looked at it, the 8-day was above the 21-day. If you had the 5 and 20-day simple, it also would have given the same signal, but you would have found that in the multi-day range, it was near the bottom of that range. I've been doing something recently when I've been looking at 3 or 4-day ranges. I've been looking at something like the 8-day against the 21-day, looking for stuff that has that bullish setup, and then looking for stuff that is at the bottom of the 3 to 4-day range. And that was how I basically found this thing with the Alphabet idea I had. And it's interesting here, it's just kind of hugging this level. That was one thing we did on Alphabet. Another one that we did recently was on Tesla. We actually, if you look at Tesla here, we found that Tesla is actually at a spot where it has retraced this entire drop. It's at 50% of that. And it's also at this kind of level here that was is 280 level or 260 level was a level from a year ago in early June of last year, and then it was some support. So not to say in any way that there's anything bearish about Tesla, but it had a historic run. It went up for 13 straight sessions, and it was very far away from its 50-day moving average, almost 40% above its 50-day moving average. So this was one where we actually were saying that this might actually be a little bit of a signal that Tesla wants to pause. The other one that we had identified that I should actually mention is Kamiko. This has gotten, and we wrote about this on TradingView when it came off this low down here. But this is actually a company with, this whole idea of uranium and everything else. I saw this article recently about how the Russians have hogged all the uranium and stuff. So this is going to be an interesting one because, as Europe tries to, have less Russian gas and everything else, a name like Cameco, it's going to be one of your few non-Russian providers of uranium. And so we had done this as a trading view idea, but what was really key about it was the way that it had this big break. There was a vote in the Senate that was positive for encouraging the use of nuclear energy. It rallied up and it held this level like perfectly. You can see how old resistance became new support, and that 8-day came right up. So we keep look at that 8-day EMA. We talked about it right there with NVIDIA. Rallied, held the 8-day, continued. Mongo database, rally, held the 8-day. Is it going to continue? And then, so these are just some of the things to be looking at. In my view right now, as I really look at this, the last thing I'll tell you is that 8-day EMA seems to be an interesting signal. And when you look here on our MA tools, we have the EMA test. So this is going to tell you stocks right there. Like look at Berkshire here. Or is that's Baker Hughes? I'm not saying that's a buy, but what I'm saying is that the 8-day exponential moving average, you can see here that it's touching the price, and it will then trigger using this scan. So I want to just show you, these are some of the tools we have. The market is constantly changing, and most of the tools we're going to have here are going to help you kind of navigate between the different opportunities that exist. I should have actually started. I did everything in backwards order today. I'm sorry. I had another meeting before, and I want to just show you. Let's actually see when we actually look in the actual price performance in the last week or so. We have this just like massive strength in the big tech. But when we look here, we can really see that like things like industrials, the industrial thing continues to look very interesting to me when we see, this sort of pattern. And when we combine what we said about the manufacturing in the United States, there seems to be something coming together around that. And when you take away the risk of or the likelihood of a recession, things like industrials that people didn't want to buy suddenly start to look more interesting. So that's some of the areas I think people are going to start to be looking toward more. So it's great to talk to you guys. We'll be back next week. Remember to go to Market Insights and look at some of the stuff we do on TradingView. Let me just give you that link in the chat. This is a TradingView main page. All the stocks in the Dow and the S&P 500. I think so. I'm pretty sure they all are. The funny thing is there are some stocks that are in the NASDAQ 100 that are not in the S&P 500, but all the Dow stocks are. So great to see you guys again, and I'll see you next week, and hope you have a great day. Don't forget, we do have the holiday on Monday.